Three reasons why now's a great time to be trading. Hi, it's Charlie giving you Tuesdays or Wednesdays video, depending on when this gets up. Um, the I don't want to make light of what's going on around the world with the coronavirus, with the what's going on with the trade wars in the oil industry, oil market as well. But at the same time, we're traders, and so we're just trading the market. And I haven't seen the markets behaving like this in years. I know we've had bouts of volatility. Back end of 2018, we had a bout of volatility then in the markets. Um, but it's spilled over into the currency markets, and we haven't really seen that in years in the currency markets. So, um, three three reasons why the markets are. This is a great time to be trading. One is the volatility. So the volatility means greater ranges. I've put an average true range on my chart here. You can see the S&P is now sitting at an average true range of 110 S&P points. To put that in perspective, that's roughly the equivalent of 1,100 Dow points. That's what it would be if it was the Dow. So basically, if I actually go on to the Dow's actually showing a little bit less, because the Dow, you can see it's at 823 points a day at the moment. That's the Dow. This is closed. That's why it's not moving at the moment. It's just a cash market. But it's best part of 1,000 points a day for the Dow. The S&P's always had a greater range than that of the Dow anyway. So huge. When you get huge points, it means that there are more opportunities. So that's another factor. So you've got the volatility. We're seeing that across the currency markets as well. And if I go to something like the euro dollar, again, you'll see the average true range has really spiked up. Look, we're back up at 91 pips daily range at the moment, and that's the average over the last 14 days. So it's probably going to actually higher than that. But it's nice to see this type of ranges coming in. So higher volatility, higher ranges means more opportunities. So if you're day trading, it means that you've got more opportunities in that regard. But then there are still opportunities and increased opportunities on a swing basis as well, provided you still wait and bide your time. Because when the opportunities come, there are the potential for these big moves. And so that's another one there. It's these big moves that you can get on the swings, whereby at the moment you could take a swing trade on a currency and make 300 pips, let's say, which traditionally, I say traditionally, but over the last few years, a 300 pip move, unless you're playing trading pound Aussie or something like that. But if you're trading like something like euro dollar or dollar yen, 300 pips is going to usually take a couple of months, and yet now it's happening in a couple of days, and that's the real difference. And from an intraday perspective, if I take us down to an intraday perspective, the other thing that I think is really interesting is the speed of the price action, which has picked up. And I haven't seen this sort of speed of price action again for years. And I was trading yesterday. Fun enough, I actually lost yesterday intraday. But that's by the by. We're always going to have winning days and losing days. But what I loved about the trading yesterday was that, and I say I lost, but sometimes it's fine lines. I was within 5 pips of hitting a target. I was up like 70 odd pips, and then it reversed, came all the way up and stopped me out, sort of thing. So, and the day would have been very different if that had got to its target. But you have to wait and see if it gets to your target, don't you? So the speed of the price action intraday has really picked up. So whether you're a swing trader or a day trader, there are opportunities for you. The next piece of advice, though, is make sure you do it in the right way. Don't get overexcited and just chase the market. So if you're intraday trading, don't just chase the market. You must have that analysis there and stick by your analysis. And it's the same with swing trading as well. So yes, there's more opportunities, but be careful not to overtrade. But certainly, even on intraday perspective, there's more opportunities. And from a swing perspective, you might have to wait for the swings to come along, because if the market's got stretched, look at this euro dollar at the moment, and same with obviously dollar yen and many of these markets, that you might have to wait for your moment, depending on where that moment is, but have the patience to wait and stick, as I've already said, stick with your analysis. And there's some nice opportunities coming. And I don't want to make light of, like I've said, of the troubles that the world has got right now with the virus spreading around. And I'm quite pragmatic about it, but I also understand why many companies are having to take the measures they're having to take, and as a result of that, that's affecting the economy, or will do. But I still see this as something which we will get through reasonably okay, and it will create a bit more of a bear market probably in stocks. I still think the stock market will probably roll over again yet, but we're already starting to see a relief bounce today if we go back to stock markets, but I doubt it's over yet, as in the coming months as the figures come through. But certainly I always see this as a buying opportunity for long-term investors. When you see pullbacks like this, put it into perspective on the monthly chart of the S&P. You put it into perspective and you say, oh right, yeah, if you bought in 2016, yeah, you're still well up, even if the S&P comes back down, a bit more. So I still see this type of thing as overall a buying opportunity for longer term investors. For short term traders, then you've got to be a bit more nimble and you've got to be careful. So reduce your position size and widen your stops is probably the best piece of advice I can give in that regard. But let's enjoy the volatility, at least anyway, in these markets. Across whatever markets you're trading, there's movement going on, and it does mean that for traders, whether you're intraday or swing traders, it means there's opportunities looming. If you're intraday, there could mean that you're having more opportunities during the day than you previously might have had. And if you're a swing trader, then the potential for large amounts of pips points once you're into a trade is certainly there as well. Anyway, I shall leave that with you. Interesting times. I'd be happy to hear your thoughts as always at the bottom of the video. Do leave any comments. I'm not a negative person, so I always look for the opportunity and for the positives that come out of any short-term volatility that we see in the markets and what goes on around the world. It was the same when we were in the financial crisis. I was never a believer that the world was going to come to an end. It didn't, and it'll be exactly the same now as well. Take care for now. I'll see you at the end of the week.